Steel stocks like JSW Steel, SAIL, Tata Steel all climb higher after the Directorate General of Trade Remedies, DGTR, that is, recommends 12% safeguard duty on non-alloy and alloy steel flat products for 200 days.
On the other hand, IT names like TCS, HCL, Tech and the Nifty IT index itself have slumped ahead of the US Fed's interest rate decision tonight. Citi has issued a bearish call for the sector, citing global macro uncertainty. The brokerage remains cautious, saying that the US macro data reported recently suggests a tough near-term outlook for the sector.
Sugar stocks rally as global raw sugar prices hit one-month highs on weakening US dollar and lower global sugar production.
GR Infra is up over 12% now after it received the letter of award for the Agra-Gwalior road project worth over 4,263 crore rupees.
Nazara Trek trades about 1% higher as the company acquires the additional 9% equity in Absolute Sports for 69 crore, taking its stake in the company to 100%. In fact, management will be joining us shortly to discuss more of this in detail. Watching us here on Chartbusters, we're live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu. With me, as always, Hormaz Fatakia. And as we speak, at the top of your screen, you would see a fair amount of green, a bright shade of green, specifically in the broader markets. The mid-cap index is definitely the index of the day. We pointed this out in the morning as well. You know, after the up move that we've seen in the frontline indices, there was case for pausing for breath. And while we're pausing for breath on the frontline indices, the supports have moved higher. The broader markets is where a lot more action was awaited. And that's exactly what's happened. Let's see where we go from here.
The faster the fall, faster you recover as well, I guess. And that's what the broader markets are doing right now. 1.5% higher for the mid-cap index. The small-cap index also doing well for itself. But don't forget the fact that the benchmark indices are not too far behind. 20 to 900 on the Nifty, continuing to go ahead from where it left off in yesterday's trading session. But putting the spotlight on corporate conversations, first up, we focus on Nazara Technologies, that the company has acquired the remaining 9% stake in the sports news platform Sportskeeda's parent company, Absolute Sports. Now, that is for a purchase consideration of 69 crores. And now they have a 100% shareholding there. Now, to discuss this in more detail, we have Nitish Mittersain, who's joining in, who is the Joint Managing Director and CEO as well. Nitish, good morning. Thank you for joining in. Now, what are the kind of synergies that you're expecting from this? You know, Sportskeeda is a well-known brand. And how do you plan on maximizing the synergies that you expect from this acquisition?
Sure. As you know, Sportskeeda has been, a very profitable business for us for many years and has grown extremely well since our acquisition of the same a few years ago. With this 100% acquisition, I believe we will be able to drive a lot more growth. Sportskeeda has also been doing certain acquisitions in the US market, including Pro Football Network that they acquired and Soap Central, businesses which are doing quite well. So I think we will be able to accelerate growth through more control of the business with this 100% acquisition.
Would you pay all of that in cash? Because there is a bit of a valuation differential between the last time the last tranche at which you acquired versus now. So I just wanted to understand that. How does that come about? And how does your control increase a little more from 91% to 100%?
Yeah, sure. I think there were multiple reasons to do this 100% acquisition. Firstly, like I said, it's a highly profitable business for us. With a 100% acquisition, we get more control on the cash flows of the company, which we can deploy in directions that we want to. And it's also an incentive because this 9% that we have bought is, buyback of ESOPs from the management team, which has done an excellent job in growing the Sportskeeda business over the last 3-4 years. It's also a reward and incentive for the team. So there are multiple reasons that we did it. We believe we've acquired it at a very attractive price. There's over 100 crores of cash in the company. So the price that we bought it at is quite attractive to us.
Is there any other acquisition in the pipeline, Nitish? Of course, before that, if you could tell us how much more cash do you have left on the books, and if there is more inorganic growth plans in the pipeline?
Sure. So I think at a consolidated level, including the new pref that we have placed of 495 crores, is still being closed. I think combined with that, we would have a little bit over 1,000 crores at a console level. And we will surely continue to look at attractive acquisition opportunities, especially on the gaming front.
Are you in talks?
Very much so. Right now, I'm in San Francisco at the Game Developer Conference. It's the largest gaming conference that happens in the world every year. And we're meeting a lot of interesting companies. So we will definitely be building a very healthy pipeline for the remainder of this year.
What typically happens in San Francisco eventually makes its way to all of America and then to the world as well. So since you are there at the epicenter, I'm curious to ask what have been, trends, early trends that you've noticed there, which could perhaps become mega trends in India, and the direction where you would take your company as well in terms of, the things that you've seen there.
Sure. Like everywhere, one of the biggest buzzwords, even in the world of gaming, is artificial intelligence, AI, and what that's going to do to the world. As even Elon Musk has tweeted, XAI has launched an AI gaming studio. So everybody is talking about that. And I believe for a company like Nazara, we've already created a center of excellence on AI. I think we could optimize a lot of our content costs, and it can be a big boost for us if we kind of lead the way on it. So I think that's something we're picking up over here and hope to execute well back home as well.
Any particular, learning things that you've picked up? I mean, Kiddopia is a big cash generator for you. Something to enhance that you've seen there?
Yes, we've done, we've recently announced many partnerships, IP partnerships for Kiddopia, like we were saying last few quarters we will do. We've signed on very popular kids IP like Barbie with Mattel, PJ Masks with Hasbro. So, some really big names coming into Kiddopia, which I think will start driving growth again for us on that product in the, coming year.
How are the numbers on growth faring? I mean, we're just 15 days away from the year ending, so quantitatively we can't expect much from this year's standpoint, but say a guidance that you have for the next year along with margins for all your verticals?
I think as you saw in our Q3 numbers, we've grown 70% year on year on revenues and 38% year on year on EBITDA. In the Q3, we posted our highest ever EBITDA till date of almost INR 52-53 crores. And I think we will see FY26 grow extremely well over FY25, both on the revenue and EBITDA side.
How well is extremely well, Nitish? Do you expect these numbers to sustain though?
Yes, I would say much better than what we've probably grown in the last year or two. And I think the growth is just starting. I think India's place in the global gaming industry is just starting. And there's a lot to be done ahead of us.
And how does, the investment that has come in from Plutus and Singularity help in the cause of that?
I think two ways. One is, our largest investor, again, coming in and backing us in a big way, really validates what we are doing. Very successful and highly respected entrepreneurs such as Mithun Sacheti of Carrot Lane backing us so strongly, again, also validates, what we are doing. And of course, the capital can be used well for organic and inorganic growth. Especially, we are seeing a lot of attractive, opportunities that we can deploy our capital into.
From where you see right now, are there any risks to the optimism that you're showcasing for this industry right now? I mean, because these come from left field, regulatory, etc. We've seen that the Supreme Court also yesterday adjourned the GST on online gaming companies case. We'll hear more on that later. But are there any other risks that you foresee?
Yeah, I think it's important to note that Nazara has, been in this business for the last 25 years and gone through many cycles of ups and downs and through many different risks of changing technology, changing consumer trends, changing regulatory, action. And one of the reasons we built our business the way we have as a globally diversified business platform, spanning many different areas of gaming, is that it really lets us neutralize the overall risk to our platform while, disruptions and opportunities in specific verticals will keep happening all the time. So I think we are well placed. We've designed our platform to manage these risks and take advantage of them.
All right, Nitish, thank you so much for sparing time and joining us today. Wish you good luck in San Francisco. Hope you come out with more deals in the near future.
Along with good luck, we also wish you good night.
Thank you for staying up more importantly.
Much later.
That's because there's the management there of Nazara Technologies there on the road ahead. for the company. We take a short break here on Chartbusters, but just before we do that, here's some good news for you. India's business news leader is now just a click away, and that's the CNBC TV18's all-new app, where you get access to breaking news, in-depth articles, and financial world updates right at your fingertips. You can download the app from the Apple Store or the Google Play Store, or even scan the QR code that is up on your screens right now to download the app. We take a short break. More on the markets on the other side. Stay tuned. Welcome back. And if वक्त बदल दिया, जज्बात बदल दिए, and ज़िंदगी बदल दी had an example, look no further but just at your screens, because on the 4th of March we made a low of 21,964. In just 10 trading sessions, the Nifty is up 1,000 points, and that shows the kind of recovery that we have seen on the index, on the broader markets as well. So it's good going for the benchmark indices as well as for the market overall in the last few sessions. But is this likely to sustain, and is it likely to build on from here? Chandan Taparia of Motilal Oswal Financial Services joins us to answer just that. Chandan, good morning. Thank you for joining in. Where do you find the next leg of hurdles for the index now that we have risen 1,000 points in very quick time? Where do you see the index going from here, and your stock recommendations as well for the morning?
Good morning. As you rightly said, the waqt badal gaye, jazbaat badal gaye. That clearly seen from last 2 days. The market made bottom near 22,000 and almost rallied by around 900 to 1,000 points in last couple of days. Yesterday, it gave the range breakout by holding well about 22,580 and now heading towards 23,000 marks. Technically speaking, it formed a bullish AB equal to CD harmonic pattern if I look at the entire price corrective move of last 5 months. So I believe the recent setup could take the index to higher zone. As of now, 22,500 will act as a major support to drive this rally towards 23,500. But on immediate basis, one need to follow the support of 22,680 to continue the momentum towards 23,250 to 23,330. And I believe that this small consolidation could offer the fresh leg of rally. And the good part is that after a long time, FIs which were selling shifted to the buying side. And if short covering happens post 23,000, then I believe more sentiment could cheer to the higher levels. So as of now, looking for 23,333 to 23,500, and Bank Nifty and other indices, apart from mid cap and small cap, could participate in this market rally.
Quite a Shairana start that was from Hormaz and Chandan as well. But let's stick to the basics. Individual stocks, Chandan, where does the money get made now?
Sure. So we need to focus on the consumption and the ongoing gold theme. First, it will be buy on Indigo. The market is flying high from last 2 days. After a long time, we are witnessing dark green color on the screen, and Indigo is one of the strongest name which we are recommending from last couple of weeks. At the time of market decline, the stock remained resilient, and recently it gave a decent up move with triangle breakout on the weekly chart. So expecting further leg of rally in counter, one can buy with support of 4,800 and it can head towards 5,100 zone. Second trading idea, that is buy on Bajaj Finance, one of the strongest name in the BFSI segment. At the time of market decline, the stock was holding well, and now it is giving a fresh pole and flag breakout, which has bullish implication. So with support of 8,700, Bajaj Finance has potential to head towards 9,150, 9,200 levels. Last trading idea, that is buy on Muthoot Finance. We have seen a decent run up in the gold, and the gold has rallied by around 82% in last 5 years, 100% in last 5 years in INR terms, rallied by 21% in this last 1 year, 14 to 15% in last 2 months. So gold is glittering and silver is shining, and Muthoot Finance looks good in that scenario. So one can buy with support of 2350 and it can head towards 2500 zone. And to sum up, we believe that momentum could continue in gold and silver, and equity also bottomed out, which can cheer up the sentiment to the street.
All right, Chandan, thank you so much for sparing time joining us today with your ideas and your views on the index as well. Bajaj Finance and Muthoot Finance, two of Chandan's 3 stock recommendations, and Indigo, of course, being the third one. We're shifting focus to our special segment now. We get you a few ideas for profit from Money Control Pro. Varsha Bang of moneycontrol.com joins us today to talk about a stock that she's tracking very closely.
Today we are going to talk about Dodla Dairy, a key player in South Indian dairy sector with a wide range of dairy products. The company has 16 processing plants and 150 milk chilling units across India and international markets, which supports its production and distribution network. In Q3 FY25, Tata delivered a strong growth despite seasonal challenges driven by increased volumes and robust festive demand, particularly in domestic and African markets. As milk procurement costs rise during the lean season, Tata intends to raise milk prices in line with industry trends, maintaining market stability and alleviating cost pressure. The company is also focusing on expanding its value-added product segment with higher summer demand for flavored milk, buttermilk, curd, and ice cream. Tata announced a capex of Rs 280 crore for a new greenfield plant in Maharashtra with 10 lakh litre per day capacity, which set to begin by FY27. For FY26, Tata Dairy has maintained its guidance, expecting 8 to 10% volume growth and 12 to 15% revenue growth. The company anticipates a steady growth in revenue and margins supported by milk price trends.
All right, with that, we'll take a short break, come back on the other side, more markets and stock-specific action, and tell you there is a lot of it.
Welcome back. Slightly off the highs of the day, but the one sector that has not had a very good time despite this market recovery has been IT. And the index is in bear market territory, considering it has corrected over 20% from the peak that it made in December last year. And sentiments around it are not changing for the better anytime soon. And that is evident from this note that Citi has written on the sector. And it says that despite the correction that includes a 16% drop in the first 2.5 months of this year itself, they find the IT sector valuations to still be on the expensive side. Now, if you compare the relative premium to the Nifty, it currently stands at 30% despite the correction that the index has seen. The 10-year average is just 12%. So it says it's still on the higher side, especially considering that India's growth prospects are likely to improve going forward. Now, Citi has highlighted some potential headwinds for the sector that includes this global macro uncertainty that we have, this recent macro data that has come out from the US, which is pointing out to a tough near-term outlook for the sector. There's competition from GCC, there is disruption from AI. All of this is going to contribute towards more problems for the sector going forward. And Citi is expecting the revenue growth under its coverage universe to be at 4% in FY26, which is the same as what they are penciling in for the current financial year as well. So no changes there as well. And as a result of which, they remain cautious on the sector, as despite the rupee depreciation that we have seen, it is going to be very difficult for these companies to improve their margins, especially because competition in the sector has gone up significantly. So as a result, they remain neutral on stocks like Infosys, HCL Tech and Emphasis, and has sell recommendations on a lot of these mid-cap IT names like Tata Tech, Coforge, Persistent. So overall, a very cautious note coming in from Citi.
And that's exactly what's keeping a lid on the gains that we're seeing in the frontline index as well. 22,900 is a mark that the Nifty is not crossing considerably or with a fair amount of conviction, but no such problems on the mid-cap end of things. When we started the show, it was up around 750 points. In just the last 20 minutes or so, it's gone up to around 850 points as well, and a bunch of stocks. You know, put your finger on anything that's surging. So we have Muthoot Finance. This morning we had the management join in, raise their guidance, stock up around 4%. CESC continues to do well. Prestige Estates, a lot of these real estate stocks which had taken a leg down are now picking up once again. And we're also seeing some traction in names like AB Fashion and Retail, which has moved to the high point of trade. With that, we'll wrap up on this edition of Chartbusters, but you stay tuned to CNBC TV18 as the team of Trading Hour comes up next with all things that are moving and shaking around in the market itself. So take your leave. Thank you for watching.